Gold is trading at a 4-month low this Thursday while the dollar hit a 2-year high. Joining us today, Peter Hugg, Global Trading Director of Kitco Metals. Pete, welcome back. Good to see you again.
It's good to be here, Danielle.
So the story as it goes today, strong dollar, gold hanging on. Can we call a bottom now?
I think people are really tied up with this, the bottom and when gold is going to take off from here. From a trader's perspective, I think this gold market has behaved exactly the way you would expect it to behave. As you know, over the past few weeks when we've been talking, I've been bullish gold at 1282. We bought the position at 1282. It's run up a number of times from that trade. We've taken our profits. Once gold broke 1282, at the beginning of this week or late last week, you have to exit the position. You have a stop loss in. We re-entered the position at the 200-day moving average at 1267. We're still with that trade with a stop loss at about 1272. So from a trader's perspective, this market has been behaving, exactly the way you would expect. You trade, you buy support. If it breaks support, you have a tight stop. You run it up. You sell it at resistance. So from a trader's perspective, there's been a lot of opportunity here to make money over the past 4 weeks.
Yeah, I'm sensing some frustration, and I can understand, Peter. Do you sometimes just feel that there's too much expectation placed on gold?
Well, again, it depends what your mindset is. If you're an investor and, you have a position in gold as an insurance hedge against your portfolio, you should be jumping up and down and opening up the champagne bottles. So, 10%, if you've got 10% of your allocation in your portfolio in gold and gold's down 4%, who cares if the other 90% is up, 15, 20%, and the stock market and the, and some of the other asset allocations have done extremely well over the past 4 weeks. You should be jumping up and down. Again, it depends on the psychology of why you're in the gold market. If you're holding it as an insurance position, should something go wrong, then you should be a happy investor right now. And you should continue to hold your gold investment as a protection against that portfolio. So I'm not sure why people are upset. People that are strictly in the gold market and they have no other investments, are upset because the gold market isn't performing as per what their advisors have told them to expect. And again, it's a matter of expectation. And right now, if you're a balanced portfolio or 5 or 10% of your holdings are in gold, you shouldn't be upset. You should be happy.
I think, and I can't speak for all investors out there, but for many, they want those highs back that they experienced in 2011 or higher. And they can't understand that based on the current environment, why gold and silver are not higher than where we are.
But why would you want that? Again, if you're holding 10% of your assets in gold, why would you want a 2011 again? Why would you want that?
Well, it's more returns, right? If gold goes back to...
It's only returns on your 10%. The other 90% is going to get hammered. It makes no sense. You're wishing for the end of the world so 10% of your assets appreciate. There's no logic to that.
What about the talk of then, $3,000, $5,000 gold? That would be a game changer.
Okay, again, based on the argument, depending on where your psychology is, if you're as an investor on a balanced portfolio and 10% of your portfolio is in gold and 90%, just for the sake of making it easy, is in equities, you think gold at $3,000 or $5,000 an ounce, what do you think that is going to mean for the equity market? It's going to mean the equity market is probably going to be totally decimated.
Okay.
So the logic doesn't make sense.
Okay. Switching gears now, Pete, let's look to silver, gold-silver ratio sitting around 85 here. What can we expect from silver?
Again, I like silver. The problem with silver, the reason it really hasn't responded to some of the, the positive economic news is it's a byproduct of production in other metals such as copper and zinc, and because of that, there are supplies of silver coming onto the market, which is somewhat depressing the price of silver relative supply-demand. I've mentioned a number of times, as you know, over the past 3 or 4 commentaries that we've had together, that I think silver under $15 is a buy, and I would much prefer to be holding silver under $15 than gold at $12.70 or $12.80. So I'm still constructive silver over the medium to long term. And from a ratio perspective, buying silver and shorting gold on a ratio perspective, I still think is a viable trade.
Peter, Hug, I always look forward to speaking with you. Thank you so much for joining us today.
Thanks. It's been a pleasure to be here.
And thanks for watching. We'll be back tomorrow.